Have you been thinking about getting into day trading recently? I know there's been a huge interest lately, and I have a really good friend of mine. He day trades. He's got a Snapchat where he documents how he does it every day. So I decided to bring him on this show, pick his brain a little bit. And if you've been thinking about starting and like to know the basic logistics, stay tuned. Thank you so much for coming on today, Albert. You're the best, and I know that you definitely like to day trade, so I figured why not I pick your brain a little bit today and ask you some questions. But first, why don't you tell me a little bit about yourself and how long you've been trading?
A little bit about myself. Well, born and raised in Los Angeles, work in the entertainment industry. I've been trading since 2013. Started trading cryptocurrencies, and in 2016 is when I transitioned over to trading stocks. The market never closes with crypto, so that'll burn you out pretty quickly. Market closes with stocks, so I'm not going to say it's easier, but it's easier to handle and organize working with stocks versus cryptocurrency in the trading sense. It just sucks. I live in LA, so I got to wake up at 5 a.m. to be ready to trade at 6:30.
Oh, that's not too shabby. It could be worse, right?
That's true.
So, what are some of the biggest misconceptions? Well, let's say you probably have a different perspective going from crypto and then to day trading, but what are some of the misconceptions that you hear in your world about day trading?
Well, I was day trading cryptocurrency, and then I got out of trading cryptocurrency regularly only because the market doesn't close. It's 24/7. So you could be in a really great position. All of a sudden you go to sleep. Something happens in China or Japan while you're asleep. You wake up the next morning and all your stop losses hit or your currency's tanked. And that's not the case in the regular stock market. Regular stock market closes at 1:30 my time. So if something were to happen at 5, 6, 7 o'clock or at 2:30 in the morning Los Angeles time, it's okay. I'm going to get an opportunity to trade these stocks pre-market or during the market. They're not just going to disappear on me while I'm dead asleep.
Right. Okay. So, with that being said, does that mean that you gravitated more towards stock because you found more stability within it?
Yes and no. It's like with cryptocurrencies, it's not regulated, so it's like the Wild West. It's like I tell people it's like the movie Boiler Room, or how you used to get cold calls with penny stocks, like the Wolf of Wall Street. Like trading cryptocurrency is a lot like that. There's no regulations in that, and with stocks, it's a little bit different. You actually know who the CEOs of these companies are. They're publicly listed. There's liquidity in them, and they're like actual companies. They're not just some coin that some dude in the basement created.
Right. Right. So, is there anything else that you think that people on a daily basis that are potentially interested in day trading, you think they may know about it, but they don't?
Oh yeah, a lot of people think they're going to get rich, like quick. That's not the case. I mean, if you're going into trading for the sake of making money, just donate your money to a charity because you're going to lose all your market to the money. A lot of people think, oh yeah, I'm just going to follow what this influencer says or jump on this Robinhood stock and I'm going to get rich. And trading is not like that at all. Like that's probably the biggest misconception, that it's easy and you're going to get rich overnight.
Right. Right. It's for the long haul. It's like
Yeah,
yeah, you invest in it like as if it were a true, real business, which it truly is. That's the purpose of stock, individual stock, is to support the business. So you're looking at a longevity perspective. I mean, right?
well, investment wise, yes. So if I'm investing in the ABC company because I actually believe in that company, it's going to go into my long term portfolio. Maybe I'll throw it into my IRA, something like that. If I'm day trading, I don't really care what the company is or what it does because I look at the chart. I'm literally in and out of a trade in a minute or less. Sometimes I'll trade at a 5-15 minute range. So I'll be out of a trade 5-15 minutes. But that's why it's day trading. Whatever it is you're acquiring, you're getting rid of in the same day.
Right. Right. And well, with your success of being able to be a beta tester for Dosh Trader, right? I mean, how did you get involved with that? What kind of success stories do you have that go along with that?
Well, doing stuff for DOS and a couple of other companies like TrendSpider, like I was one of their beta testers and I still help with it. And it's not so much that you kind of go into it. It's like I'm working with the program, regardless of the program that it is. It could be Photoshop, it could be whatever. And me personally, if I find that there's areas that could be improved, I'll message the development team of like, hey guys, I keep running into this error. I keep seeing this bad code or whatever. Is there a way we can fix this? Or based on this, maybe we could try this. Like you just give them feedback. And a lot of these companies, they respond to you. And you start to build these relationships with their engineering team or their marketing team, and all of a sudden they're like, hey, we'll give you this version early. So you beta test it and literally look for bugs. So as you play with their software, you're looking for things to break. Because especially with trading software, because if something breaks on you while you're in the middle of a trade, that could cost you a lot of money.
Yeah, I could only imagine. That's so. What kind of bugs have you found and experienced having a detrimental loss? And what have you been able to kind of salvage from being able to custom build the softwares that you've been using?
Oh, well, I don't live trade when I'm purposely looking for bugs, because in
Huh.
the event that you find one, then you're kind of screwed.
Well, what about finding them at the same time? I'm sure you have.
Well, yeah, that's happened in the past where maybe you're setting trend lines together or something, and for no reason, your clock is being delayed, or one of the lines, let's say it says $10, but you're looking at the stock price and you're like, the stock price says 11.25. Why does this say 10?
Mm,
Just stuff like that.
right. Cool. Well, and how do you set your Richter scale? I know there's like it's like a, you know, thresholds. You utilize a scanner. How do you determine that? How do you set it? And do you mastermind regularly, or do you have a certain regimen of time where you kind of reevaluate changing it?
Oh, it changes daily.
Okay.
Everyone's going to have a different set of algorithms that they use for their scanners. Because the scanner can find anything. You can tell a scanner, find only stocks that are over $5. Find stocks that are only under 100. You could tell it, find only that crossover into a golden cross. Find something that is just a volume this or liquidity that. So once you start to see what you like to do and how your trading style is, you can set these scanners with multiple like options and pinpoint very specific things that'll meet your criteria. So I won't trade things without liquidity. So there has to be, my scanner says, okay, only find things with the minimum 100,000 shares traded in pre-market. So I know for a fact that this is an active stock and that there's liquidity in it, because I don't want to get stuck in a trade. If there's no liquidity in this particular stock, then I could get stuck going in either direction, and then all of a sudden I become an investor.
Right, right. You eliminated the day trade at that point.
Correct.
Right. Like that's the concept that people
Yeah.
probably have difficulty differentiating with if they decide to get in the game. They don't understand the aspect of the differences of long-term, investment and then having that liquidity that you're looking for. What other contributing like green lights do you go for on your daily determination?
It's mainly volume and liquidity, because price follows volume. And if there's no liquidity, you're not going to be able to trade it. So like Apple, right? Apple, Tesla, the FANG stock, stuff like that. They have a ton of liquidity because everybody and their mother's trading them. All these institutions are trading them. But if you look at something like the Joe Schmo company, that's like a really small tech company in a sector that nobody looks at, there might only be 100,000 trades throughout the entire day. While you look at companies like AMD and NVIDIA and Apple, they'll have millions of shares being traded throughout the day. So you can get in and out of a trade if you have to.
Right, right. And that's important, obviously.
Yeah, otherwise you're going to
Huh.
get stuck. They say a bad day trade and it becomes an investment.
Right. Huh. What are some of the economic components that you look at on a daily basis, like that are red flags for you in your trade that day?
You mean like based on like the country's economics,
Yeah, like
stuff like that?
like economic value of whatever may be happening at that time.
Well, that's also a really cool thing that most scanners have. So things hit my scanner, you could click on that ticker symbol and it'll give you news updates. It'll be like, oh, the other day American Airlines ran while Boeing crashed, and you're like, what's the correlation here? Well, Boeing doesn't know they can make their new planes, and then American Airlines canceled their order of those planes. So it made sense that they both went like that.
Huh.
So the news affects everything. And, anytime Donald Trump tweets, they say that his tweets move markets. Like, his tweets are no match for your technical analysis, because he could say something like, the ABC company, those are great people, and that thing will run.
Right.
The XYZ company, bad people, and then that thing will tank.
Do you think that he utilizes that as a reverse psychology for his own investment?
I'm not going to say he does, but I'm not going to say he doesn't.
Right. We couldn't say either or. That would be considered a conspiracy theory.
I don't know.
I
Like,
mean,
he might.
I'm sure he does to a certain degree, or I'm sure his team or his investors at least notice, like his advisors notice. That's funny. Oh my goodness. Since real estate and stock go hand in hand, why don't you tell me a little bit about, we've had a conversation before about it, but just reiterate what you think is going on with the real estate game, how it affects you and what you're doing in your life.
Well, I'm not a realtor. Like, my brother's a realtor in the family, so I have realtor questions. I ask him, I ask you. I do finance, and one of the things that I've been doing the last couple of years are REITs. Those are real estate investment trust, and that's like, you want to invest in real estate, but you don't have the money to buy like a multi-unit condo or a shopping mall or something. You can invest within these REITs, and most of them are minimum $500 investment, and then you can invest here or there wherever you want. But those are really great ways that I started investing in properties in really diversified portfolio, like literally across the country, whether it be housing for students, a shopping mall, a distribution center for Amazon. Like, these companies that are REITs will have a diversified portfolio where someone like me or him or her or whatever that can't afford $200,000, deposit on a shopping center, can still get into diversifying with real estate.
What's your average minimum buy-in on a REIT?
Most of them, they'll say it's $500. If it's a new one that I've never tried, I'll do $1,000. Like, okay, let's take a look at this, see how it works. I'll stick with them for a quarter because they'll pay dividends out every quarter. And then whether or not I liked how it went or how they diversify, I'll stick with them or I'll leave. Like, I've been doing, what is their name? Oh, Jesus, I forgot their name. It's going to hit my head and then I'm going to pop it out. I can't think of their name right now.
No, definitely. So, that's really, so if, let's say, the stock market crashes, how would that affect REITs?
Funrise. I've been using Funrise for a couple of years. And yes. That's what they do.
Oh, okay. Cool. So everybody used to think that, well, I'll get back to the original question. If you're to invest in a REIT, okay, like, let's say somebody only wants to go, conservative, and they want to do REITs, like bonds, maybe a few other items that are like investment related, but they're nothing in comparison to a day trade or something as aggressive as that, etc., right? But they're still negatively affected, like if the market were to crash, right? To a certain degree, not as dramatic as others, because I know there's like thresholds within bonds and everything else. Are those same thresholds available in a REIT? Or is it directly affected within the stock market as the average stock?
No, a lot of REITs are not even publicly traded. A lot of them are just, they're a trust. And this trust could, I don't know, for the sake of, I don't know, this awful example, you could say like, oh, this REIT only invests in studio properties because I'm here in Burbank and they own studio lots. There's other REITs that only buy residential housing. There's some that do a mixture. Some only do warehouses and stuff. So right. if you look at things like that, then sure, the market might directly affect it. I mean, we have 55 million people that are unemployed. Over 4 million mortgages a month are not being paid. But the REITs that I'm doing with Fundrise are making money every day because a majority of the portfolio I have with them is in commercial real estate, not retail real estate, but commercial real estate, where they own giant property that Amazon uses for distribution centers, that UPS is using, places that are storage. So while people are at home not working or going to shopping malls, they're still ordering stuff online, and these trucks need to be able to pick up and drop off and deliver from commercial industrial places.
Right. And that's a whole other component that a lot of people are completely overseeing when it comes to like stock or trust, etc. Well, is that publicly contributing to society, and where you invest to help where it's already growing is how you're going to grow as well. But is it just, are all REITs not publicly traded, or are some of them still publicly traded? I thought they were.
Well,
Some of
some
them.
are like
Yeah.
Realty Income. You know, they're a company called Realty Income. They're the dividend company is how people refer to them. They give
Hmm.
out a 5% dividend, which is really good. There's
Yeah.
ticker symbol is O, and they have clients all over the country. And you can look at their portfolio if you go to their website, and they're publicly traded. I believe they're trading for like $54 today. And yeah, they pay out dividends every month, and it's 5%, and you could trade their stock. But something like Fundrise, they're not publicly traded. You invest into the company itself,
Hmm.
and with that money, the company is purchasing properties or leasing out properties or whatever.
Right. And you get a portion of the return that's inevitably going to come back.
Yeah, and with REITs, you know, legally they have to provide 90% of their taxable income back to their investors or back into cash.
Nice. Yeah.
So
Wow.
yeah, so every month it's a little more secure than you buying, you know, the hot stock of the week and having it just tank on you.
Right. Well, and also understanding, I think that that's what it ends up boiling down to, even from the day trade to the long-term investment. It's about where you putting your money that's revolving into where the growth is already happening kind of situation to a certain degree, unless you want to buy low and buy high, right? Or sell high. Tell me a little bit more about that in your day trade. Could you explain that just a little bit more to me?
Well, with my day trading, I only do technical analysis. Like I don't look at what a company does. I don't look at their P&E. I don't care who their CEO is. That company, those companies will hit my scanner. Once they hit my scanner, I'll see if there's setups that I like from a technical analysis, and I'll look to see if there's any news. I'll have my Twitter up to see what's going on over here, to just to see how news is breaking with it, because
Right.
literally my platform is set up to trade in minute intervals or 5 minute intervals. You could set it to 2 hours, 4 hours, 6 hours, entire days. But when I'm trading, I do it in 1 and 5 minutes. So all I look at is technical analysis.
And everybody's emotional roller coaster.
Yeah, and that's something you can't do, right? Like if
Right.
you're trading, like your ego, pride, greed, leave that shit at the door. It's gonna cost you money if you don't.
Wow. Uh, yeah. I could only imagine. I could only imagine. Well, I'll ask you one more question, and then I'll be respectful of your time. But you know how the market crashed, and we've got people, well, in 2007, 2008 realm, right? And a lot of them say that it was the mortgage industry that contributed to that. What's your analysis on that, and how do you foresee the causing, components for a crash?
Well, one of the leading indicators of a crash is looking at people missing payments on their cars and repossessions. Because if someone can't pay a three, four, $500 note, they're not going to be able to pay their three, four, $5,000 mortgage. And we've been seeing repossessions go through the roof since January of this year, and then the economy collapsed back March 18th, and Corona is not letting people go to work, and we've seen it since May. 4+ million people not paying their mortgages on time or at all. So those are big indicators. In 2007, 2008, that was a little bit different because that was like a Ponzi scheme, and
That's
credit
true.
default swaps were part of the reason. People were like, "Hey, you want to purchase this home? You can purchase it with no money down. I'm just going to fudge these numbers so that I, as a broker, can make a commission." And that was happening everywhere. People couldn't afford their mortgage, and the whole place collapsed.
Right. Yeah, it was a Ponzi scheme, 100%. If you had a if you had a pulse, you were getting a loan, pretty
Right.
much.
Yeah.
Yeah.
And that's not the case anymore. I mean, you got to have the credits. If you're a first time buyer, there's benefits, but they're asking, hey, you give me 10, 20% down. Otherwise, we can't give you something you can't afford because we're
Well,
going
and
to
the
repo you.
constrictions it's definitely tightened 100%, all the way from the way that they evaluate their taxes. I mean, even for a lot of the clientele nowadays, especially with the millennials, etc., a lot of people aren't making money as in the most conventional way. A lot of it's online, etc., so they have different ways of recording it, so they've definitely constricted on how to be able to report and inherit loans nowadays, so it's definitely changed.
Yeah, I have friends that work online because they're streamers, right? And they make really good money. You'd think they were a drug dealer or something.
Right.
but banks won't give them loans for homes, or they have difficulty with like apartments because they're like, you don't have a stable job or a regular job. And it's like,
Yeah.
these people are making 30, 40, $50,000 a month, and it's not from an employer. It's from them playing video games on the internet. So a lot of banks are like, no, that's not a real job. Like, you can't guarantee that next month you're going to make that kind of money.
Yeah, they
So
have
they
to,
won't get loans.
yeah, they got to turn around and like create an LLC, report taxes equally for the next
That's what
three
I tell
years,
them.
and then they
Yeah.
can actually be qualified for a loan. That's what
Well,
they have to do.
a lot of them, I just tell them, I'm like, make an LLC and pay yourself through the LLC, so it's an
Yeah.
employer that's paying you.
Yeah. It's so funny. There's so much, right? It's like that simple, but you have to do it for a total of 3 years as well. I mean, you
I
could
don't
do
know.
two.
I don't know if that's the case in California. It might be in Nevada. I don't know. I mean, I get paid through my LLCs. Like when I do any kind of consulting work, when I'm doing anything that involves like my regular job in entertainment, I get paid out through my LLC. Companies pay my company.
Right. Exactly. And then you can regulate and record everything the proper way
Right.
according to the statute of America.
Yeah. I just have my accountant do everything. I'm like, here's all the paperwork.
Oh my goodness. Well, okay, I've got to ask one last thing. One last thing.
Okay.
Okay, all right. Um, so if we have all these crash indicators, what are you doing to protect yourself?
Diversify. I mean, I have a liquid position. Obviously, you got to have liquid. You got to have money in your savings account. But I'm really diversified with the stocks that I have, the REITs that I have, the cryptocurrencies that I have. Um, everyone's got a quote air quote side hustle. Like you got to have multiple streams of income. And working as a consultant in entertainment, doing day trading, doing cryptocurrency, having the REITs, doing peer-to-peer lending. Like you just have to have multiple streams of income. So if one fails on you, you still have four or five others.
Right, right. Well, spoken like a true entrepreneur, because that's the only way you can establish yourself. Thank you so much for letting me interview you today.
No
You're
problem.
the
Thanks for having
best,
me on.
Albert.
I am.
Yes, you are. And I'm glad that you came on. And I hope you have a beautiful rest of your day. Go crush it.
Thank you.
Yeah, thank you so much.
No
And
problem.
how's Burbank? Is it boring?
No, it's actually super nice. Look. So that right there, directly in front of you, is Warner Brothers.
Yeah.
That up on the hill, that's Universal. You can see Harry Potter Land. Let's see. That's Chipotle. But yeah, no, it's super nice. It's been blue skies and